Good morning, members. It's the appointed time and we have a quorum. I call to order the meeting of the panel on financial affairs. Welcome, all of you. The first agenda item is information papers issued since the last meeting. Since the regular meeting held on 8th of April 2024, 3 information papers have been received, the details of which are set out in the agenda. The second agenda item is items for discussion at the next meeting. The regular meeting in June will be held on 3rd of June, Monday, at 9:30 a.m. The administration proposes to discuss the 3 following topics at the meeting. 1. Briefing by the Financial Secretary on Hong Kong's latest overall economic situation. 2. Briefing on the work of the SFSDC Financial Services Development Council. 3. Proposed legislative amendments on deduction of expenses and allowances under profits tax. Do members agree to discuss these 3 topics at the meeting in June? All right, thank you. The third agenda item is briefing on the work of the HKMA Hong Kong Monetary Authority. Let's invite representatives of the HKMA to come inside the conference room. Before the meeting, the HKMA has provided a paper to the panel and has tabled an additional paper. Now, those in attendance are Mr. Eddie Yu, Chief Executive of the HKMA, Mr. Arthur Yun, Deputy Chief Executive Banking, Mr. Howard Lee, Deputy Chief Executive Monetary, and Mr. Daryl Chen, Deputy Chief Executive Development, and Mr. Archie Executive Director Corporate Services. Welcome, representatives from the HKMA. Once you're ready, I'll invite Mr. Eddie Yu and his team to brief members on the relevant materials, and please be brief with your presentation. Good morning, members. Can you hear me? As we did before, we will first talk about the macroeconomic outlook, and then the Deputy Chief Executives will talk about the various areas of work. You can see here the latest economic growth projections by the IMF. The situation is similar to last year. There are individual changes. In the US, you can see here the inflation situation and the economic situation. And if you can see here, the deep blue line would be the headline inflation. It has a sharp drop last year, but it has a 3% inflation in this year. It has maintained relatively high because, as you can see here, the orange bars, there is a high services inflation, and they have a very prosperous labor market, so services inflation remain elevated. In the middle here, you can see the blue bars are the GDP figures, and they are still quite strong in the US. And as I said earlier, they have a relatively prosperous labor market, so their unemployment rate is less than 4%, which is a record low still. On the right, you can see the changes in the rate, the Fed funds rate. If you look at the U.S. Fed report, they said they would have the interest rate decrease 3 times this year, starting from mid this year. But you may have heard after the meetings held by the Federal Reserve, they said that there are still uncertainties, so they will only decrease the interest rates twice. And they are uncertain about the timing of such interest rate decreases. There are changes with market expectations of U.S. interest rate changes as a result, and therefore they have changed their expectations about the U.S. dollar as well as other Asian currencies. You can see on the left there is the figure for Asia dollar index. It is going down in general for the different Asian currencies such as Korean won, Singaporean dollars. They have been under pressure, and you can also see above the bond fund inflows. There are quite a lot of fluctuations due to the uncertainties surrounding U.S. interest rates. In the middle, you can see here in Asia, there has been reduced bond issuance, especially US dollar denominated bonds. And these are shown by the red line as well as the red bars. That is the US bonds and the share of US dollar bonds. Now on the right, you can see the bond yield spreads. It has been decreasing and it has maintained relatively stable for the Asian investment grade bond. It shows relatively optimistic market expectations. We can see in the mainland there has been a rebound in the economy. On the left, you can see in Q1 of 2024, it's 5.3% in the GDP increase. And you can see the green and blue and red bars, the net exports, consumptions, and investment have remained more or less the same. In Q1 of this year in particular, we have net exports in the mainland economy, unlike before. And if you look at the leading indicators, for example, for PMI, as shown in the middle graph, the green one would be manufacturing PMI. You can see for 5 consecutive months, manufacturing PMI is below 50. And in March and April, it would be above 50. So that would signify a resumption of economic activities. As for non-manufacturing PMI, it has been in the expansion zone for many months. So this would show that the mainland economy will remain more or less stable in the near future. We have also seen people more willing to go with northbound trading. As shown in the right, there have been fund inflows under northbound connect schemes. In the past 2 or 3, actually 3 months, you can see a net inflow. In the past year, it has been a net outflow, and in January of this year, it would still be a net outflow. Since February, we have seen more people go with northbound trading, and it has been a net inflow since then. As the mainland authorities strengthen policy on finances, they have been providing various support for companies to acquire more equipment, and we expect more investments will follow. in Hong Kong. As shown on the left, we have an increase of 12% of merchandise exports. So merchandise exports continue to strengthen. We can also see that for tourism, it has continued to recover. We have 14 million visitors in this year. It is still lower than the pre-pandemic level, but you can see here in the middle for the red part, we have resident departures that are more or less at the pre-pandemic levels. So it has posed some challenges to local consumption figures. We have, for this quarter, 2.7% real GDP growth. We expect to have a roughly 3% GDP growth this year. We still have uncertainties, however. There would be the U.S. interest rate changes, as well as the mainland economic situation, as well as the geopolitical tensions. On monetary situation, the Hong Kong dollar exchange rate has remained more or less stable in the past few months. Excuse me, I went beyond what I was talking about. Let me go back to where I was supposed to be. Excuse me. As you can see here, the Hong Kong dollar exchange rate has remained stable. In the past few weeks, we have seen an appreciation in the exchange rate. This is because there is a need to distribute dividends, and there has been a rebound in the stock market. And as you can see here, there are the lines for HIBOR and SOFR. Due to local demand, there may be fluctuations. At the end of the quarter, you can see on the right for HIBOR, perhaps we can zoom in a little. It has dropped. But recently, we can see that there is an increase because we have more transactions in the stock market. Let me say this, because there may be a delay with the decrease in U.S. interest rates. We may have a relatively sustained period of high interest. So when people are trying to loan money, one must be aware of the interest risks. Bank deposits have remained more or less stable. In last year, there has been a 5.1% in the increase in the total deposits, and we have a minor decrease in the first quarter of 2024, but we have already seen an increase in April. With the new measures introduced, we have seen that the property market sentiment has improved. If you look at the RVD figures, Rating and Valuation Department figures, in March, there has been a minor increase of 1.1%, but in general, it has still decreased for 1.8% in 2024. We have seen some fluctuations, but we do see an increase in property transactions. In February, the monthly average figure of transactions would be 2,300 odd. In March, it would be 3,900, and in April, as shown by the pink bar, 8,500 odd cases. So there has definitely been an increase of property transactions, especially in the primary market. Primary market transactions account for 42% of the total number of transactions in April, as property developers are trying to clear away their stock. As I said earlier, the U.S. Fed's future interest rate decisions will be dependent on various factors, and the pace of rate cuts are still subject to uncertainties. we can see that the Hong Kong economy should continue to recover on the back of the improving mainland economy. With more tourists, we should have more of a rebound. And we can see the economy still being quite resilient. And markets, we believe, will continue to operate in a smooth and orderly manner. We have reminded banks to maintain a suitable balance between managing risk prudently and supporting the real economy. I'll let Arthur talk about it later. Thank you.
Let me brief members on the banking sector. On loan demand, as you can see in this graph, in the first quarter, there's been a slight drop by 1% in terms of the loan demand, and in annualized term, the drop amounted to 4.1%. Against the high interest rate environment, borrowing costs have gone up, so it's understandable that loan demand would go down. About the 1% drop, that's more apparent for loans taken out locally. As for loans taken out outside of the territory is 0.5%. As for classified loan ratio, you may recall starting from 2022, there has been a continuous increase due to the risk exposure of banks in relation to the mainland property market. Some borrowers have still been in financial hardship, and overall speaking, in December 2023, the classified loan ratio stood at 1.56%, and we expect this ratio to continue to go up. Still, we believe that our banking system could absorb the risk. For classified loan ratio, if we consider the capital adequacy ratio and the value of collaterals, the coverage would be some 45%. We believe it to be sufficient. As for risk exposure, in the mainland property market, we don't observe any over-concentration of risks. So as for SMEs, like our chief executive said, we should continue to support the SME development. In the past few months, we have been liaising with the business sector, electrical members, and chambers of commerce. The Hong Kong MA and the banking sector has set up an SME lending coordination mechanism. In fact, we held one meeting in March under the mechanism, and we introduced 9 measures. In the interest of time, I'm not going to go through all 9 measures. Safe to say that there are 3 broad categories. We'll continue to support the financing needs of SMEs, and some banks have given their undertakings in this regard. And there are also credit products to be developed for SMEs to tailor for their needs, such as unsecured loans. And we'll also promote the use of a platform to enhance the bargaining power of SMEs, for SMEs to get more information therefrom. The 9 measures have been introduced for a month or so, and we have yielded some results. For example, the mechanism covers 11 banks, and all of them have introduced fee waivers, etc., to help tide SMEs over financial difficulties. 9 banks have also introduced new credit products in the form of unsecured loans to help SMEs stay afloat. Another highlight of the banking sector is our legislative proposal. We'd like to thank the Legislative Council for passing certain amendments to subsidiary legislation to implement Basel III final reforms. Now, what is left is the commencement notice towards the end of this year. Meanwhile, for the subsidiary legislation, we've also promulgated codes and guidelines to set up the details of subsidiary legislation. Another major task for us is to review the banking ordinance. The last review was conducted some 30 years ago. Some consequential amendments were put in place since the last major amendments, but it is high time that another amendment be introduced. In light of the developments in the banking sector in the past 30 years, we find it necessary to amend the ordinance. There are also other obsolete regulatory requirements that should be revamped or updated. So in the second half of this year, we're going to propose an amendment to the banking ordinance. So the bill will be tabled into the Council in the second half of this year. And also what just rolled out last Friday, that's the Hong Kong Taxonomy for Sustainable Finance. It was published last Friday on May 3rd. This taxonomy is published for the benefit of the sector in taking forward green and sustainable finance initiatives. This useful tool can help the sector or the banking sector take forward their financing initiatives in green and sustainable finance. 4 categories and 12 types of activities are included in Phase 1, and we will soon commence Phase 2 to cover more sectors and activities, and we will also include the definition of transition finance or transition activities in the second phase. I'll now give the floor to Mr. Lee, Deputy Chief Executive, please. Yes, let me brief members on the development of the financial market. This chart shows you Hong Kong's offshore renminbi business. As you can see, we have achieved stable growth in terms of deposits, loans, dim sum bond issuance, trade settlement. We have recorded positive growth. In the meantime, we have continued to enhance connectivity with the mainland under the various Connect schemes. For example, the People's Bank of China announced 6 measures, including 3 connectivity initiatives and 3 facilitation measures. Now, in terms of Hong Kong Monetary Authority's renminbi liquidity facility, banks may start using renminbi bonds issued onshore as eligible collateral for obtaining liquidity. And we have introduced this new measure with some positive response. The other enhancement measure is the Cross-Boundary Wealth Management Connect scheme, which went into effect on the 26th of February. Banks have begun to introduce services under the Scheme 2.0 with positive market response. For example, in March, we've recorded a significant increase in the account opening, cross-border remittance, etc. So we've recorded a multi-fold increase, which is a very good trend. At the same time, the Hong Kong MA is working with the banking sector and industry associations to set up promotional and education efforts. As for our next step, we'll continue to liaise with the mainland and enhance investor education. Next, on green finance. In February this year, we assisted the government in the second issuance of tokenized green bond with some very good response. This is the inaugural issuance around the world using multi-currency denominations. The total market capitalization was $6 billion. That's quite a big sum, and we have received good market response. We are now supporting the government in expanding the scope of the government green bond program to cover sustainable finance projects. An infrastructure bond program will also be set up. The borrowing ceiling could go up to $500 billion under these two programs. The resolution is due to be passed in LegCo in the council meeting of this week, and very soon we will proceed with the bond programs. And we are going to extend the Green and Sustainable Finance Grant Scheme by 3 years. We will expand the scope of subsidy to cover transition bonds and loans. In fact, we just promulgated an updated guideline last Friday. And after the last meeting, we welcomed the Hong Kong Green Week. We attracted participants from Hong Kong and from around the world to attend these events. Outreach. The Hong Kong MA visited different places to promote Hong Kong's business and our position as an international financial center to bolster the confidence of investors. Apart from visiting Paris, Brussels, and New York, we also plan to visit some ASEAN countries such as Malaysia as well as Indonesia. We will negotiate bilateral cooperation. That means we will be collaborating with the central banks and other banks in these two places for financial cooperation. The third Global Financial Leaders Investment Summit will be held between the 18th and 20th of November this year. Preparations are underway. Next, on stablecoin, we floated the legislative proposal to regulate stablecoin issuers. We have collected views from the public, and we are analyzing the views. After completing drafting of the bill, we will be introducing the bill to the Council as soon as possible. In March, we launched a sandbox arrangement for stablecoin issuers so that the issuers who are interested in issuing stablecoins in Hong Kong may conduct their testing in a risk-controlled environment. And we'd also like to facilitate two-way communications with them. Right, I will now give the floor to my colleague, Mr. Lee. Next, I will briefly introduce the financial infrastructure and other initiatives to members. I think members are very familiar with the financial infrastructures such as faster payment system. Since its rollout 5 years ago, we have continued to register rapid growth. In March this year, in terms of transaction volume and transaction amount, year on year, we've recorded a 30% increase. As for other financial infrastructure projects, things have remained stable. Now, CDI, commercial data interchange, since its introduction, $19,000 operations relating to loans have leveraged on commercial data interchange, in particular in drafting the credit assessment report. Next, we have another initiative, the central bank digital currency, CBDC, such as mBridge. We have entered the minimum viable product stage, pre-MPV. We expect moving towards the MPV phase in the middle of this year. things have been smooth so far, and we expect to move into the MPV phase very soon. There's also another project called Project Ensemble. We held a press conference in relation to that, so I'll skip this part here. For retail CBDC, we have e-Hong Kong dollar as well as e-CNY, and we have been liaising with the PBOB very closely. We do hope that the e-CNY would be very convenient for Hong Kong people to use the e-wallets across the border and vice versa. And we will announce any news to the public as quickly as possible.
Next, let's talk about the investment performance of the exchange fund. Let's talk about the investment environment in the first quarter of 2024. You may see that in the top graph there has not been much change, but in the graph at the bottom, you can see for the first quarter of 2024, there has been bond yield change. And when there is an increase in bond yield, there is a decrease in the price of the bonds. We have seen bond yields remain relatively high. So we have a positive income in bonds. On the equity market, you can see for European and US stocks there has been an increase. For stocks in Hong Kong in the first quarter, it is still dropping. For the US dollar, it has broadly strengthened against major currencies. So even when we're not making transactions, we are still making a loss, essentially. And you can see here for the investment income. As I said earlier, we have recorded a loss for bonds, but then we have interest income. So we have still $25.1 billion in income. For Hong Kong equities, a loss of $2.3 billion. For other equities, $36.3 billion in profit. Foreign exchange, a loss of $4.8 billion. So right now, the total investment income so far is 54.3 billion Hong Kong dollars. Let me point to a figure in particular. For 2023, the exchange fund foreign exchange income, we said it would be a $200 billion profit, but then for other investments, you can see there is a $23.7 billion. This is due to valuation changes of private equity and real estate investments. We have now included the fourth quarter changes in these figures. That's why for the 2023 figure, there is a total investment income of $226 billion. Now, with the outlook, there are many changes with the financial market. In Q1 of this year, we can see that foreign stock markets have been performing quite well, but starting from 1st of April, for example, for the US stock market, S&P 500 has been going down. It has suffered a 2 to 3% decrease. For the Hong Kong market, it is opposite. In the first quarter, it has not been doing well, but since April, we have been doing quite well. In the second quarter, we have seen an increase over 10%. So let's just say again, there have been many uncertainties with the financial market, and there are still fluctuations in the market. We would ask the public to be cautious. Now, with the income and expenditure, let me point to two figures in particular. In 2023, the fee payment to fiscal reserves was $35.5 billion. As for fee payment to HKSAR government funds and statutory bodies, it's 16.5 billion Hong Kong dollars. Let me now talk about the several schemes under the Mortgage Corporation Limited. We have seen the situation being more or less stable. At the end of February, not only do we have the measures implemented by the government, the Mortgage Corporation also relaxed certain requirements for the mortgage insurance. We do see an increase in transactions, but then we can see that the increase will be delayed because mortgage applications would usually come after property transactions. On SME financing, I will not talk about the detailed figures. The situation has remained more or less stable. For the 80% guarantee product, it has been terminated, but then for the other two products, they will be extended. The 100% product has been terminated, but the 80% guarantee and 90% guarantee products will be extended to 2026. We expect them to provide support to SMEs in the next few years. For the dedicated 100% loan guarantee schemes, there have been schemes provided to the cross-boundary passenger transport trade and the transport sector. There's also a scheme for electric taxis. We have only seen 4 applications, which is few. We believe it is because taxi owners are still looking for the right models to be used in Hong Kong, and by then we should see more applications. We'll closely monitor the situation. That's it for our report. Thank you. Thank you for the presentation. It's now the Q&A session. I will assign a 4-minute time limit, questions and answers included. I'll read out the order in which members are going to speak. Mr. Chen Chenying, Mr. Lee Chen Kang, Dr. Johnny Dr. Tan Yueheng, Dr. Wendy Hong, Ms. Carmen Khan, Mr. Chen Kin Po, Mr. Sunny Tan, Mr. Holden Chow, Mr. Jeffrey Lam, Mr. Tan Ka-Piu, Mr. Louis Lung, and Dr. So Chang Wing. First, Mr. Chen Chenying. Thank you, Chair. I have a comment to make and 3 questions. They are saying that would increase the borrowing ceiling to $500 billion. When you issue the relevant bonds, I hope that there can be more RMB denominated bonds. Now, with my 3 questions, for the credit data smart, it has been launched in April of this year, and we have a 2-pronged approach being adopted. I want to ask, when will you adopt a single rail approach? Now, on 26th of February, there has been the expanded Wealth Management Connect. We see quite good performance with southbound trading, but not northbound trading. How will you increase the interest in northbound trading? Can you enhance the relevant procedures? Is that the reason why people are not as interested? Now, with the SME financing scheme for the 80% and 90% guarantee products, they will be extended to March 2026. And some can transition to normal repayment arrangements. How many companies have opted for normal arrangements? Do you have the figures? And Is there a significant difference with the bad debt ratio? Thank you. I'll answer one question and I'll have Arthur and Edward answer the other questions. In March and April, we have seen an increase with southbound trading with the Wealth Management Connect 2.0. Indeed, northbound trading has not been doing as well. We believe it is due to the fact that southbound trading would offer more diversification. For people in Hong Kong, we already have such options, so there is not much need to do so through northbound trading. But we'll, of course, review our procedures, for example, the arrangements for sale, to see if we can enhance our arrangements. Thank you. On Credit Data Smart, since it was launched in April, we have seen operations being quite smooth. In the second pilot, we did see some room for improvement, especially with the updating of information. Upon the launch on 26th of April, we will continuously review the arrangements. We want to enhance the accuracy before we remove one of the rails. We have been continuously reviewing the arrangements, as I said earlier, but we do not have a concrete timeline. But we will aim to remove one of the rails as soon as possible. On the dedicated guarantee scheme or the SME financing guarantee scheme, it's hard to provide concrete figures on the switch from one arrangement to another. For 80% and 90% guarantee products, for this year, the application figures have remained more or less stable. It is similar to those of last year. The increase is a single-digit figure. So we can see that the situation has been more or less stable. For the bad debt ratio, for 80% guaranteed products, it's approximately 4.4%. For the 90% guaranteed products, it's about 2%. Thank you. Thank you, Mr. Lee Chen-Kung. Thank you. The administration talked much about the impact of interest rates. With U.S. interest rates being quite high, they wanted to control their inflation, and their inflation is at 3%. And I can see the inflations are more or less in control in the U.S. But what should we do when we are faced with sustained periods of high interest rates? We should perform risk management to prevent any money from rushing into certain markets. We can see that the exchange fund has made an investment income in 2023 at $226 billion. And in 2024, it has so far been $54.3 billion. We should consider how we can better tie in with national policies. We have the 18A, 18B, 18C enterprises. We also have the Northern Metropolis. We have various measures. Can you be more innovative to help enterprises? That's my second question. For the SME financing guarantee scheme and the dedicated 100% loan scheme, what are the bad debt ratios? For what is the one for 100% loan guarantee scheme and the 80% and 90% guarantee products? if there are indeed higher bad debts, who is going to be responsible for that? Thank you.
Let me take the first two questions, and Howard can take the third question. On U.S. interest rates, indeed, there are uncertainties, but Powell last week also commented on it. He said that the direction would remain the same, and that means rate cuts would continue, not the other way around. But the timing and pace would depend on economic data. In fact, last week, if we take a look at the figures published relating to jobless figures, etc., it seems that the labor market in the U.S. has not been as tight as once expected. Is there room to lower the rates? And I'm afraid there is no room to do so for Hong Kong interest rates, because this would affect the capital flow. So I'm afraid we can't work on our local interest rates. Policy-wise, is there anything we can do to support the local economy? Of course there is. We can support SMEs, and we can take forward major projects to boost economic activities. As for the exchange fund, investment is made for the purpose of building up our reserve, for the purpose of maintaining the stability of our currency. So it is important for us to acquire foreign assets so that in the event of major fluctuations, we can realize the assets to stabilize Hong Kong dollar. The government has a property fund, and the Hong Kong Investment Corporation can consider your suggestion. Perhaps I'll give the floor to Howard to tell you about the default rate of the SFGS. As I said, for 80%, the default rate is 4.2%. 90% guarantee product is 2%. For 100 special guarantee product, the rate was 7.5% as in mid-April. When we applied for funding with LegCo, we already took into account the bad debt ratio. Now for the a special 100% loan guarantee, the 7.5% rate seemed high, but we expected some 20% back then. Next, Dr. Johnny Ng, I'd like to ask about negative equity cases. You recently announced that we hit the 20-year record high, and that's 32,000 cases. And the delinquency ratio also rose by 100%, up to 0.6%. As we know, these cases relate to high debt servicing ratios. Now, I'm concerned about C&I cases. Even in busier districts, some shops have been left idle, and there is a concern that banks may call loan as a result in a drop in rental value. Are there guidelines for banks to take the middle-of-the-road approach so as to bring positive impact to our economy? The second point is about fintech. And according to recent news, the U.S. SWIFT system could exclude certain Chinese banks and entities. Now, Hong Kong is an international financial center. And meanwhile, I understand that the Hong Kong MA is testing mBridge with good results, promoting transactions with different currencies. Will it be possible to expand the scope of mBridge more quickly so that at the retail level we can attract more participants to mBridge and support our status as an international financial center? Let me take the question on negative equity cases and mBridge, and Arthur can take the other question. Indeed, there's been a surge in negative equity cases, but we shouldn't just look at the number. In the first quarter, the figure rose by 1.1% in March, but overall speaking, property prices dropped by 1.8%. With high debt servicing, a loan-to-value ratio, with a drop of 1.8% in prices, you would see negative equity cases. About the 0.6% delinquency rate, that's a very small number. So let's say if it goes up by 0.03% to 0.06%, we're talking about some 10 cases as per 1,000 transactions. So that's still a very small number. For negative equity cases, that very much depends on the repayment ability of the borrowers. 0.06% delinquency is not a very high percentage. Most of them are covered by the mortgage insurance program. That means these borrowers usually have a stable job, and there is also a high requirement and high income threshold. For Enbridge, we are testing the minimum viable product development, and if it's successful, we will consider including more players. Apart from the 4 central banks, there are also 25 central banks in different jurisdictions as observers. They are keeping track of our development, and once we enter into the MVP phase properly, more participants will join and form a bigger network. Let me take the third question. If we're talking about a shop that is not leased, that means the landlord receives zero income. Comparing to the landlord not willing to lease the property, it's against the grain in terms of risk management behavior. Well, basically, this is an understood theory. Coming back to this slide, in March, we rolled out 9 measures. The first one is that under this coordination mechanism, banks should give this undertaking, and we also require other banks to do the same. I'm specifically referring to commercial loans taken out by SMEs, and if they are repaying the loan on schedule, banks should not call their loans. Now, this is to a lay member's concern. Let me also clarify that if you learn of any case running into difficulties, do tell us. Dr. Tan Yueheng. Thank you, Chairman. I have 2 questions. First, about macro economics. On page 31 of the Hong Kong MA's materials, it refers to economic activities, and in terms of export volume, year on year we have registered a drop. That's economy activity for Hong Kong. And in fact, in terms of retail and catering, these are areas of local consumption. It seems that residents are spending money elsewhere than locally. In 2023, the cargo throughput in Hong Kong dropped to the 11th place, and this is the first time we've fallen out of the top 10 chart. Now, of course, shipping is not the entire export sector, but it is a very important indicator. For retail and export, these are the 2 drivers of the 3 drivers of economic growth. And if these 2 drivers are facing daunting challenges, does it mean that our economy will suffer this year? And what will be the impact on local enterprises? The second question is on payment systems. It seems that we are going exactly the other way, and mainlanders come to Hong Kong to find themselves unable to pay with a mobile phone. And in the mainland, there are places that do not take cash. Meanwhile, the government has introduced measures to help mainlanders. The government has introduced measures in the mainland to make sure that cash payment will still be acceptable. Whereas when mainlanders come to Hong Kong, they're used to paying with their mobile phones. Of course, they can pay with Alipay. Many of them don't bring cash. But there are still shops in Hong Kong that only take cash. So my question is this. What is the coverage in the respective sectors of mobile payment systems? If the coverage ratio is not high, will there be measures to further promote the use of mobile payment? Let me take the first question about page 31 of our slide. Indeed, in 2023, there's been a drop in export volume, but in the first quarter of 2024, there's been more than a 10% rise. This could be due to more global economic activities, as well as the end of the down cycle. Of course, we'd like this uptrend to continue. As for aviation, we have remained resilient. For retail, as I explained, residents going out have increased to the pre-pandemic level, but that's not the case for incoming tourists. With more cities included under the individual travel scheme or visit scheme, we hope to attract more visitors from the mainland and elsewhere. And meanwhile, the government also holds a number of major events. Now, in particular, in the past few months, when it comes to business travelers, we've seen a surge because of more major conferences and business activities being held in Hong Kong. Lastly, on mobile payment or retail payment, we have a variety of retail payment channels in Hong Kong. Hong Kong residents run into different problems when paying in the mainland, but for mainland tourists coming to Hong Kong, they can pay with Alipay, etc. And foreign visitors can use credit card, debit card, etc. I think the bottleneck is paying taxi drivers. As I understand, incentives are offered for taxi drivers to adopt new payment systems. We hope that the take-up rate will go up eventually. Dr. Wendy Hong, I thank the Hong Kong MA for their briefing. My first question relates to green and sustainable finance. The government has put forward a number of initiatives to promote green and sustainable finance, such as Core Climate, recently introduced, but we haven't received any update from you. Many startups have approached me. They'd like to leverage on the Core Climate to take forward their innovation and technology initiatives. They need, say, verification of the carbon footprint and carbon emission volume, and also monitoring of carbon and methane emission. So Core Climate is the infrastructure that could support their development. This is a financial platform. This is also a platform that can drive the development of green innovation technology in the future. So I think we should expedite the development of Core Climate and foster collaboration with the INT sector. So an update on Core Climate, please. Second question. Earlier, I read from the news that to enhance fund management and enhance AML, some multinational banks have closed down independent wealth management business. Clients have been asked to handle the assets left with banks in the 3-month period. Now, for family offices, their confidence in the bank in managing their assets have been hampered. Have you sought an understanding with the family offices being so impacted by this policy, whether it is getting more difficult for them to set up accounts, and will it in any way hamper the government's effort in promoting family offices in Hong Kong as you tightened AML regulations? And there have been more stringent control over assets from family offices in Asia by the U.S. So will it affect their family offices' presence in Hong Kong?
Thank you. I will answer the question related to the Hong Kong MA. For the other questions, they are more related to the HKEX or the SFC. Now, we do see the core climate having positive feedback, but there has not been much in transaction because the carbon market is still developing. I'll let the HKEX give more information on this. When you have the asset management business situation, I understand indeed that there are concerns expressed by enterprises on the anti-money laundering measures. And individual banks may have made decisions of factors that are relevant to them. But for asset management banks and other banks, there are many options. I don't think it will necessarily cause difficulty with family offices. As for the eventual impact on customers, we have asked banks to deal with issues experienced by customers. We also have dedicated groups that will provide assistance if necessary. Let me also say this. We'll draw the line here because we have 10 other members who are going to speak, the last one being Ms. Starry Lee. When you speak, please be brief. Thank you, Ms. Carmen Khan. Thank you, Chair. Mr. Eddy, you said interest rates would remain high for a while, so members of the public should be cautious of interest rate risks. And it is also said that for the negative equity cases, it has increased to 32,000 odd cases. And the delinquency ratio has also increased to 0.06%. Would you say which figure, when it gets to that, we should be concerned about the situation? My next question is something that was asked by Mr. Chan Chen-ying about the borrowing ceiling. While I do support the increase of borrowing ceiling, I want to know more about the development of offshore RMB business. Compared to the same period last year, there has been an increase of 15%. Will you take this opportunity of increasing the borrowing ceiling? With reference to various factors, would you have a more favorable offshore RMB curve in order to enhance our attractiveness. I also think the HKMA for conducting consultations on stablecoin regulatory arrangements. This was, in fact, a suggestion that I made earlier during panel on financial affairs meetings. I believe that would be regulated by the CNED, Customs and Excise Department. And you have collected public feedback on this. What does the public think about this? And what other comments do they have? Thank you. On negative equity cases, we are not so concerned about the increase of cases because with property prices dropping, there would bound to be more negative equity cases. We should be more concerned about the default rate. The delinquency ratio. There has been an increase to 0.06%, but then we would say it's still a relatively low figure and the situation is more or less stable. We have confidence because banks have put in place very stringent arrangements and requirements for applicants of mortgage. For the mortgage products in general, for first-time home buyers, it has been more loose in order to facilitate their purchase of property. With the borrowing ceiling, that is $500 billion, most of that would be RMB denominated products. In the past 2 years, we have seen a greater demand for dim sum bonds. When I talked about the figure 13%, we're talking about a base figure that is quite high, so 13% is actually quite a significant growth. We will definitely issue more RMB denominated products as the member suggested. We have collected 100 feedback for the stable coin consultations. We're collating the views and there are suggestions for specific arrangements. We're currently reviewing the feedback and we will incorporate such feedback in our legislative proposals. Chair, I want to follow up on the RMB issue. I want them to provide more tranches with different bonds. Well, of course, we have some very short term bonds that is 1 to 2 years, and then we have also up to 10 years. We will have definitely multiple options. Thank you. Mr. Chen Qingpo. Thank you. HKMA plays a very important role in the regulation of the financial market. We do not want to be too lax, but we also do not want to be too stringent. I think all along HKMA has been doing pretty well with the problem of calling loans in particular. We don't want banks doing that because it can cause a domino effect. So I thank the HKMA for making clarifications in a timely manner. We have to make such clarifications because it may affect market sentiment. On offshore RMB business, we have become more or less a hub. We have been doing pretty well. How will the HKMA continue to facilitate the development of offshore RMB business? This is also an important national strategy, so we should make sure we can tie in with the national strategy. Also, do you have any figures on electronic payments and cash payments, the ratio of it? Thank you. I'll answer the first question, and Arthur will answer the second question. On offshore RMB business, we have been developing the framework and we have implemented some arrangements. We have to ensure there is adequate liquidity of offshore RMB business in Hong Kong. We have mutual exchange arrangements with the People's Bank of China, and we have been working on more facilitating measures. And the CSRC has implemented 5 measures to facilitate self-bound trading. And that would in turn inject more impetus in the Hong Kong RMB denominated product market. So we now have the regulatory framework. We are now trying to encourage banks to have more communication with banks in different jurisdictions, for example, in the Middle East or Southeast Asia, in order to promote trading and settlement. We need to expand into other markets to ensure that there is more uses of the RMB products. And we have been doing a lot. We have gone to the Middle East, we have gone to Thailand, and we will soon go to Malaysia. We've also gone to Malaysia, we'll soon go to Indonesia. And we will continue to do work in this regard. On retail payments, I'll let Arthur answer that question. Thank you. We have performed a survey 2 or 3 years ago. Before it was 60 to 70%. We do not have any recent figures. We will see if an update is necessary. We have been doing work in this regard, but I think I need to stress this. We shouldn't phase out cash altogether. It is still useful. We need to instead ensure merchants will accept different payment methods because different people would have different needs. Thank you, Mr. Sunny Tan. My questions are similar to those of Mr. Chen Kin-po. We have seen various measures progressing well. I think, however, we can provide more products for loans. We have, in general, some products that are very attractive, but we need to have even more options to provide diversification, and that only then would we be able to attract more businesses and enterprises. I heard some bank senior officials say that the sizes should be increased further in order to facilitate the arrangements. Thank you. And also with the electronic payments, we need to promote e-government services so that people don't have to mail a check to pay fines. We have also other e-government initiatives. How can we promote connectivity of these different electronic infrastructure in order to facilitate SMEs and other individuals? Thank you.
I'll take the first question. Howard can take the second one. And I must agree with you that our RMB deposits in Hong Kong have exceeded 1 trillion renminbi, and for deposits to loan ratio, it's over 50%. So we have sufficient liquidity. But we need to work on 2 things. Are we keeping liquidity in the banking system only? Is there even distribution among banks? Is the flow of funds smooth among banks? Are there obstacles? For renminbi loans and renminbi bonds, we see a lot of room for rapid growth. Renminbi loan increased by 130% in Hong Kong last year. Dim sum bond also rose by some 60%. For the time being, the borrowing cost for renminbi is on the low side, and that is an incentive for more enterprises. So this is something we need to work on. We should enhance renminbi liquidity along these directions. So members, rest assured, we will work on these things. As for e-payment, Chief Executive, you already explained the renminbi situation. Let me give you one figure. In terms of the size of the renminbi pool size, it's not big, but according to the RTGS, the renminbi daily transaction volume increased from 2 trillion to 3 trillion a day. The efficient payment system has helped support transactions in renminbi so that the daily turnover could be up to 3 trillion yuan. As for e-payment and e-government, we fully agree that we should work on these areas, and we are working with the government. A few weeks ago, the Financial Secretary announced that this digital policy office has just been set up, and the Financial Secretary has appointed the establishment of the office. In fact, this afternoon we will be having a meeting with various government departments to help them take forward e-government initiatives. Next, Mr. Holden Chow. Thank you, Chairman. I'd like to make a comment, and then I'd like to ask a question. The comment relates to banks calling loans. Now, I think members would agree with me that in this day and age we need to be very careful, because there could be a knock-on effect if it is triggered, and we will put SMEs in dire straits. So please make sure that this is not happening. And as you explained, you've already asked the banks not to call loans under certain conditions. And then I'd like to talk about the SME lending coordination mechanism. Now, as I read the PowerPoint here, we want to enhance the bargaining power of SMEs to facilitate the switching of lending banks. Now, this is a good deed. We've heard about cases in which SMEs have found it very difficult to switch to another lending bank. These 9 measures were rolled out in March. How about an assessment 6 months down the road? Will you collect statistics about SMEs successfully switching lending banks so that we can gauge the effectiveness of the measure? In the past, we've heard about SMEs running into difficulties in switching lending banks. So we want to verify the cases, and perhaps the HKMA can announce the results of assessment 6 months after introduction, so that we know the effectiveness of the measure. Let me take your question. Mr. Chow has made a very good suggestion. Now, for the 9 measures, apart from enhancing the bargaining power of SMEs, there are also other measures that support the SMEs, such as one that Mr. Chow may recall. In fact, we're going to set up a mechanism together with the Hong Kong Association of Banks and Chinese Enterprises Association to see if the work has been effective. Now, the coordination mechanism holds a meeting once every 6 months. As for the latter platform I mentioned, we will have more meetings to follow up on the measure. But thank you for your suggestion once again. Mr. Jeffrey Lam, Chairman. The Hong Kong MA has been explaining to us that they would foster greater collaboration with the central authorities, but I don't have a lot of information, I'm afraid. Can you give me more details? I think this kind of collaboration is very beneficial for Hong Kong, especially in attracting capital from the north. About Islamic bonds, recently we have been promoting investments from the Middle East. Will you expand Sukuk issuance? And can the Islamic bond and renminbi bond go hand in hand? As for the local economy, things are picking up. But for some individual sectors, such as the exports, it has remained weak. Now, in the recent Golden Week, we have received many visitors, so there's been an improvement for retail and catering. Still, it's a far cry from the pre-pandemic level. I thank the Hong Kong MA for rolling out the 9 measures to help SMEs. In fact, not just SMEs, but also major enterprises. Banks have been providing support as well. But I've also heard about some tricky cases. How should they be handled? Of course, I understand that banks will need to consider the individual circumstances of the borrowers. Still, for other borrowers in general, I hope there will be a closer communication with the banks. Now, it is quite impossible to tell you each and every case requiring assistance. The Hong Kong MA should do more. I remember in 2009, when we first proposed the SME financing guarantee scheme, it was eventually taken on board by the government, and at the time we expected over 20% of the SMEs to fold up, but the SFGS eventually helped many SMEs stayed afloat. So there should be closer communication with banks so as to tide the SME over the difficulties. I will take the 2 questions, and then Daryl can take the question on the Islamic bond. And I share this sentiment with you that definitely during dire times, banks should weather the storm with SMEs together. And this is also how we talk to banks. In fact, helping SMEs stay afloat could help banks as well. If SMEs stay afloat, they will remain clients to the banks. As for collaboration with the PBOC, in the end of last year, we rolled out the 3 connectivity and 3 facilitation measures. We are now exploring further expansion of the Connect schemes. We need to work on the Connect schemes first, and then we should consider further expanding the scope of renminbi products, and perhaps take forward WMC to 3.0 from 2.0. We do communicate very closely with the PBOC for Islamic finance. In fact, we constantly update members on our progress. But we face difficulties. For example, the issuers don't often issue Islamic bonds. And we don't have a strong investor base in Hong Kong for Islamic bonds. Still, we'll tap new opportunities. In the end of this month, we're going to visit Malaysia. It is an important financial hub for the Islamic world, and by then we will continue to tap opportunities. Thank you for your comments. Mr. Bill Tang, 2 questions. The budget announced measures that have brought changes to the property market. It's been 2 months since the delivery of the budget. Do you have any analysis relating to first-time home buyers? With increase in property transactions, property prices have been stabilized. So for younger first-time home buyers, would you say that there are more of them now? Taking 40 years old as the threshold. I'd like to have an update from you. Next point. The Hong Kong MA and the MPFA have been looking into options that could bring stable return to MPF scheme members. By stable income, that means, or stable return, that means at least it should be higher than the inflation rate. And we've been deliberating on the loans ordinance and that there would be priority investment in MPF. Is this the outcome of your study in collaboration with the MPFA? If so, do tell us more about that. How do you make sure that once this product has been developed, the MPF trustees won't be charging high administrative fees and eating into a big portion of the returns? Now, about first-time home buyers, I don't have figures relating to young home buyers. As for the overall property market trend, we have seen a surge in property transactions, and we've also introduced mortgage relaxation measures. This should help home buyers. Another figure we can consider is the MIP, mortgage insurance. But after all, this figure is lagging behind the market. About the 90% mortgage ratio, we do have some figures we can share with the member after the meeting. Howard can supplement my answer later. Now, for government bonds, MPF fund managers can have priority in investing in the government bonds. This is one way to generate stable return. There are also other measures that they are exploring with the government so that stable return can be generated for MPF members with lower administrative costs. I'm happy with the C's answer because from what I heard, under the loans ordinance, MPF fund managers will have priority in investing in government bonds. But after all, we have a free market, and you're relying on market forces instead of introducing a policy in this regard. So I hope that this is known to the Hong Kong MA. If we have backing from the Hong Kong MA and the government, definitely the ordinary employees will have greater confidence in the product. Yes. To pick up on what Mr. Yu said about helping young home buyers, we need more time to analyze the statistics, especially after mortgage relaxation measures. But let me say that the MIP in itself is already something that can help young home buyers. For those not taking out insurance under MIP, they are mostly in their 40s. For other first-time home buyers on MIP, they're in their 30s. That means this is one important way of helping young first-time home buyers. Mr. Louis Lung. My question is on review of the banking ordinance. In the second half of this year, the Hong Kong MA will table an amendment bill into LegCo. So I suppose you have completed this review. One important element of this review is to streamline the supervisory structure from 3 tiers to 2 tiers. So have you come up with recommendations after this review? Since you're going to submit this amendment bill in the second half of this year, I suppose today you should be able to tell us broadly what this review is about.
I'll perhaps let Arthur answer this question. Thank you, Mr. Leung, for your questions. We have talked about roughly during our press conference before, but let me give a brief overview on the amendments. Of course, there's the change of structure from 3 tiers to 2 tiers. And before, we did not have any regulatory arrangements for bank holding companies. In major banking centers around the world, they would have regulatory arrangements on holding companies. So that's a loophole that we have to plug. And with the punishment, right now we have 2 extremes. Either they would be very insignificant, and for the more serious cases, we would have a complete ban on activities. That's why we are trying to see if we should impose punishment that would sit in the middle of the spectrum. We have seen some changes with the banking industry, but as I said, no major amendments have been made to the banking ordinance. For example, if an employee has served an institution for a period of time, and the employee, the institution that they have worked at, has their license surrendered, the employee would have to notify the authority of this. We consider this requirement to be not so practical, and this is one of the examples of arrangements that we are reviewing. We will report our review findings in due course. We expect to give members an update at the next or the meeting after the next meeting. Thank you. I understand, of course, regulatory arrangements are very important. We hope to see a presentation of yours soon. Thank you. Dr. So Chun-Wing. Thank you. I have 2 questions. One, the HKMA has implemented 9 measures to support SMEs to alleviate their difficulties and facilitate their development. But for banks, it may be risky. So I want to ask, what specifically are the risks of the 9 measures? Will they be borne by the banks, or will the government bear some of the risks? I also want to ask about what the Deputy Chief Executive said. The 9 measures were launched in March, and they have seen very good results. They did not mention the specific effects here. So, what kind of impact do you see in this short month? And what criteria we will adopt when reviewing the effectiveness of the measures. The Deputy Chief Executive also talked about the default rate. For 80% guarantee products, there would be a 4% default rate. For 90%, it is actually a 2% default rate. For the 100% guarantee product, it's 7.5%. So for the 90% guarantee products in particular, it has a relatively low default rate, oddly. Have you reviewed why this is the case? What made the differences? Has that impacted your policy formulation? On ECNY, we can see it is an part of the national strategy, and of course Hong Kong should attach great importance to that, but it was not mentioned at all in your document. The Deputy Chief Executive did mention that they have maintained close liaison with the PBOC, and if there are any updates, announcements will be made. ECNY is supposed to be very important. Why is it not mentioned at all? Do you face any difficulties or any hiccups with the promotion of ECNY? Thank you. I'll answer a question and then I'll let my colleagues answer the rest. We have put in place the facilitation and connecting schemes. And as Howard said, we are at the final stage of ECNI. We have to follow up with PBOC on certain matters. We will soon make announcements. We are at the very final stage. We do not face any difficulties or hiccups, rest assured. Thank you. I'll also say that we do not face much pressure. Otherwise, we wouldn't have the facilitation measures launch really quickly, the ones that are launched in March. With the risk management of banks, we believe it is still within their capabilities with the measures launched. We do not consider there to be pressure on the banking sector. I will not go into details because of time constraints, but let me just say this for the measures after they have been launched in March. For those in the coordination mechanism, they have provided waivers on fees, waiving of fees for SMEs. They have also provided the use of fintech for unsecured loans in order to facilitate fast approvals. They also do not require collaterals from SMEs. We also have some data interchange arrangements. It has facilitated banks in the obtaining of information. We will ask more banks to provide loan products to SMEs specifically. We right now have 9 banks. We should have more banks in future. The speaker's microphone is not on. The speaker's microphone is not on. Right. On the default rate issue, there are 2 main reasons. One, there is a particularly high default rate for 100% products. This is understandable because it was launched in the economy when the economy was not doing so well, and for 80 and 90% products, the difference in the default rates is probably due to the different years the products were launched. And for the 80% product, because it was launched earlier, that's why it has a higher cumulative default rate. And in fact, more companies would take advantage of the 80% product. For the 90% product, there are significantly less companies that would take advantage of that product, which is probably why there is a difference in the default rates of 80% and 90% products. Thank you, Mr. Chen Han-pan. I would like to thank the HKMA for giving us a comprehensive presentation. I understand that in the second half of this year, you will submit an amendment bill to make amendments to the banking ordinance. We do observe many complaints made by members of the public on banking services. In recent years, we have seen some banks, compared to before, have made significant increase in their incomes or profits, but they have not enhanced their services to companies or individuals. Some people, especially companies, have expressed difficulties in opening accounts, and that would definitely impact how many business would want to come to Hong Kong. There should definitely be an enhancement in the services provided by the banking sector. Also, for some banks, they would just not open their branches, or they would have long queues in the branches. But the banks do not have enough ATMs either. For certain ATMs, even if they are installed, they may not be available for use. So, can banks enhance their ATM network? When branches are not open, or for some reason the banks are closing down the branches, people can still take advantage of the ATMs. We have said this multiple times, and we have expressed the public's concerns to the relevant sector. I hope the HKMA can take note of the concern and see if there is anything that they can do. On ECN, just renminbi in general, CNY has been playing a more important role in the world. We, of course, want to take advantage of that as well. Can we liaise with the mainland authorities to see if we can provide more RMB products? If we can provide more products, that should facilitate the development of RMB business in Hong Kong. If we want to develop Hong Kong into an RMB settlement center, we need to have mainland banks set up in Hong Kong as well. Will we perhaps have the Bank of China set up a China Hong Kong center in order to develop Hong Kong into a settlement center? Thank you. I'll answer the second question, and Arthur can answer the first one. On the issuance of RMB bonds or the provision of RMB products, Hong Kong still has room for improvement. And we can see many mainland businesses or banks having set up centers in Hong Kong. We will continue to encourage institutions to set up presence in Hong Kong. I'll let Arthur answer the rest. Thank you. We need to practice prudential regulation. Should anything happen, what kind of intervention should we practice? We adopt in general a prudent approach. We also consider financial inclusion. When we look at other financial centers' arrangements when they practice a prudential approach. They do not take into consideration in particular financial inclusion, but that is definitely a factor we would consider. As you may remember, we before have a banking conduct division, and that division would consider in particular the network of banks and the ATMs that are put in place. As you may remember, the division's colleagues have also liaised with banks on the placement of branches a few years ago. We will continue to liaise with banks to make sure they can provide adequate services to the public. We do understand that different districts would have different needs, and we would review feedback when we receive such. Thank you.
Sorry, your time is up. Please wrap up very quickly. Like the Hong Kong MA said, it's their business choice as to where they set up their branch and what business they take in, but they have the bargaining power. It's very difficult for the average Joe to approach a bank. So the banks should observe their corporate social responsibility as well. Very often, we strive for ATMs and branches to be set up at certain locations only to benefit the community. So we are relaying this view to the Hong Kong MA on their behalf. You should not just left this decision to banks. You should also consider needs of local communities, because banks may not be willing to serve the minority. Ms. Darity. Chairman, Hong Kong is an international financial center, and as such, we should continue to tell good stories of Hong Kong as an IFC. Recently, there have been suggestions that we are no longer the international financial center because of our weak stock market. But I think we need to lay out holistically our strengths as an international financial center. We have a variety of financial business in the financial services sector on top of the stock market, such as offshore renminbi business, and that's been a stable growth in this regard. In further promoting ourselves as the offshore renminbi hub, the Hong Kong MA, the government should work harder in developing more products and striving for more initiatives from the central authorities. So more should be done to let stakeholders learn more about the various services we offer and the various functions that we carry as an international financial center. On top of that, we also have insurance and the bond market, and I'd say that we have been doing quite well in these areas. So in terms of outreach, will you take a consistent approach in promoting Hong Kong to the world? The Hong Kong government has different departments that undertake promotion in different aspects. But I think a centralized approach should be taken in telling good stories of Hong Kong about as an international financial center. So I'd like to know whether you have a strategy to promote the Hong Kong brand as an IFC, whether we'll put together the different stories to give stakeholders a full picture. See, well, this is very well said. It is important to tell the story of Hong Kong as an international financial center. In fact, last month I visited the US to attend an event. I took part in different activities to promote Hong Kong to investors and other stakeholders, and will be visiting Europe next week to do the same. Apart from the Western countries, we have also been promoting Hong Kong to the Middle East and Southeast Asia. When it comes to promoting Hong Kong, we don't just talk about the banks in Hong Kong or just a particular portfolio. We talk about Hong Kong in general. We tell them the important figures, the numbers can tell you that our economy is not contracting, it's expanding. On the contrary, we have continuous inflow of capital. We tell them these important figures. We also share our work with the SFC, etc. We tell them about how we build the ecosystem. So this is about outreach. Another important function for us is to bring investors in. In March, we had the Financial Week, and then in April, after the Hong Kong Sevens, we held a major show attracting a lot of people to come to Hong Kong, and it's an opportunity for us to tell Hong Kong's story. It is very important that the government take the lead. You need to explain and leverage on different stakeholders to tell people about the merits of our financial system. I think many stakeholders, including members here, are all chipping in. Very well said. We have a set of figures. If need be, we can provide this information to members for circulation so that you can also build your story on these numbers. We also leverage on influential figures around the world to help us promote Hong Kong. For 2 consecutive years, we have been holding the Financial Week. The CEOs and other important figures would go back to their countries to tell our stories to their investors, to the board, etc. And they are more impactful than us. Right, perhaps you can circulate this information sheet to members for our benefit. So to sum up, members have talked about striking a balance between regulation and development. And this is often the position that members adopt. That means apart from promoting development, we should also remind banks of their responsibility. There should not be overly stringent regulations, because this would stifle banks' incentives in serving different clientele. Very often, we come across cases of difficulties in opening bank accounts. And the progress in approving applications to use certain services. So I think as a regulator, you should also bear in mind there is a need to ensure market development. The borrowing ceiling will be adjusted upwards to 500 billion Hong Kong dollars under the Loans Ordinance to promote bond market development. And I'd like the Hong Kong MA to explain more to the public that the government debt to GDP ratio is just 9 to 13%, whereas in Singapore and other countries it could be as high as 100% or more. So you should tell this story and explain the merits of bond issuance to our economy. The other point is this. As an IFC, we have a variety of financial services, one of which is CMU, and you are in the process of developing a new platform. You are also conducting outreach to attract more bond issuers to issue bonds in Hong Kong. This is nothing new. I don't see anything mentioned about communication with the Hong Kong Exchange. Like Mr. Darely said, we should all chip in. When you have the cross-boundary wealth management scheme 2.0, it involves brokerage firms and other parties. All stakeholders should chip in promoting the initiatives. Right. Let me respond to the point on CMU. In fact, we are discussing with the SFC and the Hong Kong Exchange on possible collaboration in taking forward the new platform of CMU and on bonds, as you put it just now. The loan to GDP ratio is on the low side in Hong Kong. Even if we reach the borrowing ceiling, it would just go up to 13% of our GDP. In fact, when I attended the IMF conferences, I met with a number of credit agencies, and they've warned us a number of things. That is, the level of loans should not be exceedingly high, and they acknowledge our level as being appropriate. And also, after issuing bonds, the funds raised should not be plowed back to cover recurrent government spending, but rather to support infrastructural development. And in fact, we are going to balance the books in a few years' time. We have a proper budget. So the message I get is that they note the scale of bond issuance and the justification. Right. Thank you, Hong Kong MA, for attending today's meeting. We now go to item 4 on the agenda, promoting paperless corporate communication for Hong Kong companies. Let me invite the administration to come in. We're joined by Mr. Keith Kang, Deputy Secretary for Financial Services and the Treasury, Mr. Benjamin Au, Principal Assistant Secretary for Financial Services and the Treasury, Ms. Helen Tang, Registrar of Companies, Ms. Majestic Young, Deputy Principal Solicitor, and also from the Hong Kong Exchanges and Clearing Limited, Mr. Paul Malam. So let me welcome representatives from the FSTB and the Hong Kong Exchange to our meeting. Let me invite Mr. Keith Kang, Deputy Secretary, to brief us on the paper. Thank you, Chairman. Together with the company's registry and the Hong Kong Exchanges and Clearing Limited, I'd like to brief members on the legislative proposals for promoting paperless corporate communications by means of website for Hong Kong companies. The government has been monitoring very closely the latest changes in the market and technological advancements to promote a more business-friendly environment for companies in Hong Kong and to raise our profile as an international financial and business hub. And the Hong Kong Exchange has revised the listing rules, provided that it is permissible under the relevant laws of jurisdiction where the company is incorporated. The listed company may adopt the consent mechanism of its choice for disseminating corporate communications electronically. And for listed entities, they can make use of the news alert service. Shareholders can make use of the service to receive notification by email or by mobile alerts. And in fact, since 2010, the relevant stipulations have been introduced in the company's ordinance to facilitate e-communication with shareholders by companies. At present, under the company's ordinance, with the consent of shareholders, communication can be made electronically through email or through uploading to the company's website. under the existing consent requirement, prior express consent must be obtained from shareholders, or that deemed consent must be obtained. That means there should not be any objection within 28 days of the company's request. The company should also notify the shareholders each time a corporate communication news is made available on the website. We should have regard the rights of shareholders, and on this premise, we propose to refine the above mechanism. That means we are going to introduce an implied consent mechanism. If the articles of association of the company state that they may disseminate the communication via website, they can choose to adopt implied consent mechanism. They don't need to seek individual shareholders' consent before disseminating communication via company's website. The second requirement is a separate notification requirement. Given that Hong Kong X has already provided news alert service for listed companies, we propose the same mechanism be adopted, and that means for listed companies, there is no need to send separate notification to shareholders for a new corporate communication uploaded to the website. For non-listed companies, there may be a different approach, and we propose that one-off prior express consent be sought from shareholders for non-listed companies, for obviating the need to send separate notification to them. The third point is safeguards to protect interests of shareholders. Now, for listed and non-listed companies seeking to adopt implied consent mechanism, a first-time notification should be sent to each shareholder in hard copy form or electronically to inform them of the new arrangements, and the shareholders may continue to make requests for the new corporate communication be sent in a document or hard copy form. We believe that we can strike an appropriate balance between facilitating the company's business and safeguarding shareholders' rights. We have held briefings, and we briefed industry representatives such as professional bodies, company secretaries, lawyers, accountants, and the insurance industry, etc., about the details of the legislative proposals. Stakeholders were generally supportive of the proposals, which should help enhance cost effectiveness of companies. Now, we've also exchanged views with stakeholders on safeguards for the interests of shareholders. We've also obtained support from the Standing Committee on Company Law Reform, and we are in the process of analyzing views collected from the public during the consultation. Our goal is to introduce an amendment bill into LegCo in the second half of 2024. I'll be happy to take questions from members.
Thank you. It's now the Q&A session. 4 minutes will be given, questions and answers included. I'll read out the order in which members are going to speak. Mr. Rock Chen, Mr. Chen Chen-ying, and Dr. So Chen-wing. Mr. Rock Chen. Thank you. We are trying to introduce an implied consent mechanism which would not require individual shareholder consent. I understand a small number of shareholders, perhaps due to their old age or they just don't go onto the company's websites, they would want to have hard copies. It would just be a small number, but their needs still have to be accommodated. Will the administration consider putting in place a transition arrangement even if you want them to adopt the implied consent mechanism? Apart from publishing the corporate communications on website, other electronic communication methods may be adopted, such as emails or SMSs. We receive a lot of fraudulent SMSs these days. How can you make sure that shareholders can identify your messages to be non-fraudulent and prevent any potential scams? Will you perhaps consider telling shareholders that, for example, you would only disseminate information, you would not ask them to provide details? you would not require perhaps a reply from these shareholders. Thank you. Deputy Secretary. Thank you. We are collecting feedback, and we would consider such feedback if it is relevant to the transitional arrangements. Transitional arrangements would be one matter, but eventually we would want to facilitate shareholders that are not familiar with using the relevant electronic communications. We will therefore maintain the section on shareholders' right to request companies to provide hard copies under Section 837 on the company's ordinance. On scam prevention, there are many different modus operandi of scams. All we can do right now is to enhance publicity. We would probably advise companies to adopt the approaches you mentioned. For example, to tell the shareholders that the dissemination of information would just be one way. We would also liaise with service providers such as company secretaries and trust companies. They would provide services to companies. We will enhance liaison with them to make sure this message is clear. We will also maintain liaison with the police and other enforcement agencies to implement public education initiatives to prevent people from falling for scams. Thank you. Mr. Chen Chen-ying. The speaker's microphone is not on. I support the promotion of paperless corporate communication for Hong Kong companies. I have 3 questions. 1, for listed and non-listed companies, in order for them to use paperless corporate communication, their laws of the jurisdictions in which they incorporate should allow for that, or their articles of association should allow for that. With companies that do not have existing articles of association that allow for that, how would you facilitate their change in their articles of association? Also, I understand that the HKEX would have a news alert service for listed companies. For non-listed companies, they would have to seek one-off prior express consent from shareholders individually. Would you consider allowing for such arrangements to be resolved at shareholder meetings instead? I'm not sure if you're aware, often shareholders would not respond to communications sent by companies. So this may not be feasible. Would you perhaps put in place a deemed consent mechanism that if, for example, communications have been issued 3 times and there has been no objection, you can allow for that? I also see in international practice, in Bermuda, Cayman Islands, and the mainland, they would account for 80% of the companies, listed companies in Hong Kong. And only Bermuda has the relevant separation notification requirement. Would you consider also implementing, for example, allowing the shareholders to resolve at shareholder meetings in order to allow for the separate notification requirement to be waived? Thank you. Deputy Secretary, please. Thank you. We would allow for the amendment of Articles of Association, and after they have amended Articles of Association, they can make use of the implied consent mechanism immediately. And I understand many companies have already adopted electronic communication, so that with the changes of Articles of Association, these can also be communicated electronically. On the implied consent mechanism, individual shareholder consent would not be required for dissemination of information on websites. For non-listed companies, they would need to issue a first-time notification. For listed and non-listed companies, actually, both would be required to issue a first-time notification. To inform shareholders of the arrangements before implementation of the implied consent mechanism. We consider the approach being taken prudent because we do want to protect shareholder rights as well. The members suggested making use of a special resolution. We will review this suggestion on the arrangements for Bermuda incorporated companies. We have to make reference to the laws in other jurisdictions. We can perhaps look into it with the HKEX to see if we can implement other arrangements. Thank you. Deputy Chairman, Dr. So Chen-Wing. Thank you. I have some questions for the administration. I want to ask about the policy intent of the administration. What do you wish to achieve? Are you trying to increase efficiency? Are you trying to achieve environmental friendliness, or is it in some way facilitating the management? From what I can see in the paper, with the protection of safeguarding shareholder interests, I think there is a conflict. You are talking about there are 1 million odd companies. There are different types of companies. If you have to protect everyone's interest, it may be difficult, but honestly, I think you should provide more details in your paper, especially in relation to shareholder protection. This is a measure that can impact shareholders' rights significantly because an implied consent mechanism will be put in place. How will you make sure there are sufficient safeguards for shareholders in the amendment bill to make sure their rights are indeed safeguarded? I hope the administration will take that into account. Do you need an answer? Well, yes, please provide a brief response. As the members said, we want to achieve dual purposes with that. One, we want to increase efficiency, but we also want to promote environmentally friendliness by adopting paperless communication. By adopting paperless communication, it will be more efficient for companies because they no longer have to send out communications by post. So both purposes should be achieved with the adoption of paperless corporate communication. We also want to put in place sufficient safeguards for shareholders. Unless shareholders' consent is obtained, they will still need to issue the relevant communications to shareholders individually, and shareholders can obtain hard copies. If necessary, the relevant provisions will be retained in the ordinance. Thank you. Lastly, Ms. Colin Kong.
Thank you, Chairman. As the administration just explained, the legislative proposal has struck a balance between environmental protection and enhancing efficiency of business operations. But at the same time, you need to safeguard shareholders' rights. So for listed companies, since the 31st of December last year, a mechanism has been set up, and it's been a quarter. Have you received any feedback? The second point is about the implied consent mechanism. Under this mechanism, shareholders should first be educated about what implied consent meant. So perhaps on your website you can provide information to shareholders about the clauses involved or the articles of associations that have been updated for the benefit of shareholders. The third point, this relates to international practice. 90% of the companies were incorporated in the 3 jurisdictions selected here, mainland, Bermuda, the Cayman Islands. Now, can you tell us, riding off the back of it, for other international financial centers promoting paperless corporate communication, what is their progress for our benefit, please? First, about promoting the implied consent mechanism, I will make a start, and then the Hong Kong X can perhaps take the other question. When we introduce the implied consent mechanism, we will share with the companies and professional bodies the templates of articles of associations. We have 1.4 million companies in Hong Kong. 1.37 million of them have 3 or fewer shareholders. For companies of this scale, I don't think they would release corporate communication on their website. Still, we will mount publicity. And let me give you some figures. Apart from listed entities, there are some 50 companies in Hong Kong that are non-listed with over 50 shareholders. So for these companies, there is incentive for them to be able to release corporate communication on the website in a paperless manner to achieve environmental protection and efficiency. So perhaps the Hong Kong X representative can take the other question, please. Yes?
How well it's been going for the listed companies so far. So since the 31st of December, we've been monitoring the progress of the listed companies' compliance with the new requirements. I'm happy to say that the vast majority have already switched to electronic dissemination and are ready to go. So 92% of the companies didn't have to make any change to their articles because they were already fit for compliance. And of the around 200 issuers who have to change their constitutional documents, half of those have already changed their articles. For the other about 93 companies, we're currently waiting for their AGM notices to go out, so we expect that once they have called their AGMs, they will have changed their articles by then.
Ms. Khan, I suppose you still have another question about international practice, whether there are templates available for reference. According to information at hand, we have provided information about jurisdictions where most of the companies were incorporated. About other IFCs.
To provide model clauses or certain templates for the listed companies and the shareholders for reference?
We don't have model articles on our website at the moment, but they can always contact our listed issuer regulation team to get advice on how their constitutionals could be redrafted.
I think it would be helpful if templates were provided for the general public and these listed companies. So we hope that the FSTB and also HKEX can seriously consider this recommendation.
Sure.
Yeah.
Thank you.
Okay. 好，咁
Right, that ends this item. Save for me to say this. According to the paper, the Government is studying the views collected during the public consultation in detail with a view to finalizing the legislative proposals. The target is to introduce an amendment bill into LegCo in the second half of this year. Any views from members? If not, then of course, promoting paperless corporate communication for Hong Kong companies could help streamline processes, enhance operational efficiency, whilst achieving environmental protection. So do consider members' views. So that ends the item. Thank you.
好啦，今日嘅議程第5呢，
Item 5. Proposed implementation arrangements for an uncertificated securities market and relevant legislative proposals. Let me welcome the administration to our meeting.
李成希，其他都係一樣嘅係咪？OK， 咁今日出席呢一部分嘅會議咧，就有財經。
For this agenda item, we're joined by Ms. Manda Chan, Deputy Secretary for Financial Services and the Treasury, Mr. Li Xinghe, Acting Principal Assistant Secretary for Financial Services and the Treasury, Mr. Rico Leung, Executive Director, SFC, Ms. Triti Mukadam, Senior Director, Supervision of Markets from SFC, Ms. Glenda So, Co-Head of Markets, Hong Kong Exchanges and Clearing Limited, Mr. Hector Lau, Head of Clearing and Depository, Mr. Richard Huang, Chairman of Federation of Share Registrars Limited, as well as Ms. Pamela Chung, Vice Chair. Once again, let me welcome representatives from the FSTB Hong Kong X SFC as well as Federation of Share Registrars Limited to our meeting. When you're ready, Deputy Secretary for Financial Services and the Treasury, Ms. Manda Chan, please walk us through the paper. Thank you, Chairman members. Together with representatives of the SFC Hong Kong X and the Federation of Share Registrars Limited, I'd like to brief members on the implementation arrangements for USM and the legislative proposals. USM forms one of the major elements of the internet of our financial system. In a paperless manner, USM will allow transfer of shares to enhance transparency of issuers and protecting the rights and interests of shareholders. The 2021 bill was passed, a Securities and Futures Companies Legislation Amendment Ordinance 2021 established the framework for the USM regime. In 2023, last year, according to the USM regime, the SFC consulted a public consultation and received general support from the public. I will give you details of the features of the USM regime. ASR will be appointed for securities to be evidenced and transferred through electronic registration and transfer system, and in a paperless manner, shareholders will be able to manage and view the securities electronically. Investors will also be able to communicate directly and electronically with the issuers to give instructions in respect of corporate actions and receive corporate communications. This will give investors better choice and protection. On transfer under the existing regime, the existing nominee structure in CCAS will be retained, only that the process will become electronic. Investors will instruct their brokers to receive the securities and then confirm with the ASR to transfer the securities to HKSCC nominees. An electronic interface will be established. The arrangement will significantly reduce the time required for depositing securities into or withdrawing them from CCAS from 10 business days to within 2 business days. This will provide a more efficient and direct communication channel for issuers and investors and improve relationship management. It will also enhance the overall competitiveness of the Hong Kong market and enhance the local market's infrastructure. USM will be used in the evidencing and transferring of securities. The ASR will therefore be a very important element in this regard. It is important to set up a new approval and regulatory regime for ASRs to require the systems, facilities, financial conditions, and services to issuers and investors to meet the latest or the relevant standards and requirements to safeguard the rights of investors. In relation to the rules for USM and a new approval regulatory regime for ASR, we propose to make the subsidiary legislation, including securities and futures and certificated securities market rules, USM rules in Annex 1, as well as the rules in Annex 2, that is securities and futures approved securities registrars rule or ASR rules. And there are also consequential amendments to existing legislation, such as the stamp duty ordinance and other pieces of legislation to facilitate the process of stamping and collection of stamp duty in the USM environment. We plan to submit a bill into LegCo to amend the stamp duty ordinance and amend the subsidiary legislation concerned within this year with a view to implementing the USM regime in 2025. Chairman, I just referred to the USM rules and ASR rules. These are important parts to the regime. I will now give the floor to Mr. Rico Leung, Executive Director of SFC, to walk members through the latest rules. And we welcome questions from members. Chairman, members, just very briefly, let me explain the two rules to members. In March 2023, the SFC made subsidiary legislation for the introduction of the USM regime. In October last year, we also consulted the market on the Code of Conduct. The consultation has come to an end. We've received overall support on our proposal. Now, there are two new rules. One is the Securities and Futures and Certificated Securities Market rules. The rules provide for the regulation of certain matters in the USM environment. Basically, the rules cover 5 aspects. First, the keeping of registers of holders of securities. The securities will come in a paperless form in the future. So the rules will set out how registers are to be kept. Second, in the USM environment, how should securities be transferred? The third point, electronic messages will be sent to authenticate the transfer of securities. And in the USM environment, we set out rules on authentication of e-messages and the rights and responsibilities. The fourth area is a core one. For investors who'd like to convert securities from certificated form to an uncertificated form, we spell out the process requirements, etc., in the specified circumstances. Finally, we also impose deadlines for the listed entities to join the USM regime. So these are the 5 major areas of USM rules.
For ASR rules, that is Securities and Futures Approved Securities Registrars rules. As said earlier, in the stock market, we have been making use of the CCASS. It is not under direct regulation by the SFC. In future, the approved securities registrars would play a more important role. That's why we will impose regulatory arrangements on them. And the essential matters to be covered in the changes or in the ASR rules would be: 1, the scope of securities registrar services. We would also impose requirements relating to ASR systems, financial and other resources, including risk management, as well as their operation and business. We will also ask them to report regularly to allow us to regulate their activities. Third, we have also made changes to existing legislation. That is the securities and futures listing rules on the ASRs. We also have in place some changes for the securities and futures open-ended fund companies rules. We will also amend Schedules 5 and 8 of the SFO. And we will also make some changes to the companies winding up rules. That's it for my introduction to the changes. Thank you. We are now in the Q&A session. I'll assign a 4-minute time limit, questions and answers included. I'll read out the order in which members are going to speak. Dr. Johnny Ng, Mr. Rock Chen, Dr. Kennedy Wong, and Ms. Carmen Khan. Dr. Johnny Ng, please. Thank you, Chair. I support the legislative proposals as they are very beneficial. I want to ask, you said you would impose deadlines for the market's transition to full dematerialization. What is going to happen when we reach the deadline? What will the arrangements be for the companies? Will you provide incentives to investors to switch to uncertificated securities? And what is going to happen with the original paper copies of the securities? On regulation. Right now, securities registrars, as said, are not subject to the direct regulation of the government. Operations have been running smoothly. Now the government is going to regulate them. Will you provide enough support to them to make sure they would comply with the requirements? Does the government have enough resources for that? Thank you. The member asked when there will be a complete adoption of the USM regime. We will implement the regime in phases. We will first focus on some companies that are already adopting a more or less similar approach. We will then focus on mainland Bermuda and Cayman Islands companies. We would want them to join the USM regime as early as possible because these companies account for the many listed companies in Hong Kong. We expect those incorporated in Bermuda and Cayman Islands would be able to join the USM in 5 years. There are 2,000 odd companies incorporated in Bermuda and Cayman Islands. We expect them to take a longer time because they would need some time to amend their articles of association. For example, they may also need to have shareholder meetings in order to resolve the resolutions. That's why we expect them to take 5 years to complete. As for how we can encourage investors to switch to uncertificated securities, an incentive would definitely be enhancement of protection for investors, because securities will be in electronic form. It would be easier for investors to prove that they have ownership to the relevant securities. This would definitely be an incentive. The SFC, the HKEX, and the FSR will also see if they need to provide additional support to investors. And through the SFC preparatory committee, they will see if any publicity campaigns will be needed. I will now let Mr. Leung of the SFC provide more supplementary information. Thank you. Let me first say this. Right now, the approach that we're proposing is that we will not ask all investors to switch to uncertificated securities. So essentially, they would be provided with an option to hold securities in paper form. So it would not be the case that we have to force them to switch to uncertificated securities. We believe, however, with the implementation of the USM regime, investors will see the benefits of holding securities in uncertificated form. They will then switch to uncertificated securities. As we also said earlier, with securities registrars, we are concerned with their operations of their systems. That's why we have plans to impose requirements relating to their ASR systems. In fact, we also regulate the securities firms and other settlement companies. We have experience in regulating relevant operations. We should have enough manpower to do so. And right now, securities registrars only amount to 10 odd. We do not consider this to be an immense pressure on our operations. Thank you. Mr. Rock Chen. I would like to thank the representatives for giving us an overview of the proposed implementation arrangements for the USM regime. You would adopt a phased approach. I think it is good, but then if you face difficulties, for example, when there is a failure with the systems, would you have any backup plans to resolve the difficulties first? Also, for uncertificated securities, do you expect a lot of firms that would need to update their systems? For security firms in particular. If it is the case, have you conducted assessments for Category C, the smaller firms? Do they actually have the resources needed to update their systems? Thank you. All right, administration. Thank you. The member asked two questions. One is on the approach for implementation. It is said that we expect the regime to be fully implemented in 5 years. So some would be in the first stage, some would take part in the second stage. And we believe with this phased approach, we would be able to reduce the risks involved. So that is why we took this approach. Next, right now, we do allow for investors to continue to hold hard copies, as we said earlier. So securities firms would be holding the securities as agents. If the customers or investors continue to want to hold securities in the securities firms, the securities firms should not be affected. However, when investors want to hold the securities in their own name, there would be transfers needed, and then securities firms may be affected, but we do not see this being a very heavy workload for securities firms. Thank you. Dr. Kennedy Wong. Thank you. I do support the direction that the administration is taking. However, for the implementation arrangements, we see that there will be more operations needed to be performed on systems. And for example, it would be the same for the land registry. It has been decades since the land registry has implemented electronic arrangements, but then they have yet to provide arrangements for absolute arrangements for the land titles, and there has not been adequate protection of data, and the public is concerned that there may be potential data breaches. Should there be data breaches, will investors be provided with, for example, insurance, so that we could allow for them to make claims should there be breaches? I also want to ask, will IDs, individual IDs, be assigned to investors should they choose to hold securities in their own name? Is it a must that they have to go through issuers or the approved security registrars? Thank you. For the ASR rules, we have in those rules some system requirements for ASRs, the design, the monitoring, and any contingency arrangements. We have requirements on these. The detailed implementation would be undertaken by the SFC, so I will perhaps let Mr. Leung talk about how to make sure the requirements put in place will ensure the systems of ASRs would run smoothly. Thank you. As said earlier, we have requirements relating to ASR systems. We will review the design of the systems. We will also make sure the capacity of such systems will be able to accommodate the needs of the investors. And security is, of course, very important as well. We will look at the security against attacks. Also, when something happens, what their contingency arrangements are, whether they would have any backup plans, that would also be something that we will look at. We will definitely make sure this is secure. Have you considered putting in place an insurance option for investors? Who is going to answer that?
This issue of insurance.
開個咪要嚇
Sorry.
no OK
Issue of insurance, I think it's a bit different in the context of the land registry because for the register of members, it's prima facie evidence of title. It's not absolute evidence of title anyway. So I think that comparison is not entirely maybe appropriate. I think on the insurance aspect, currently the share registrars do have insurance coverage for different kinds of part of their business, including where there is title issues. I think they do it together with the issuers. They have an insurance arrangement together with the issuers. Is that right? So what they do is that they have the issuers, they have a bunch of issuers, or a group of issuers rather, and they collectively buy insurance to deal with problems that may arise on the ROM. I don't know if that answers your question. We also have in our regulation, we will have requirements around insurance in terms of ensuring their business operations, the ASR's business operations.
OK 嗱，我收到我明白，但係即係將來因為呢一個係
I do understand what you're saying, but then the SFC will take the initiative in the implementation. Will you consider having the administration take the lead in acquiring insurance? Is there any response from the administration on this?
Right, perhaps let me supplement. As mentioned by Mr. Leung from SFC, under the ASR rules, there'll be a lot of importance attached to cyber or data security. There will be a real-time monitoring. There will be contingency plans as well. So investors will not be deprived of their legal title or rights because of any cybersecurity issues. And the compensation arrangements will also remain the same. So in the event of any loss on the part of investors because of a system fault, the current compensation regime will remain the same. And as such, we are not taking forward any particular insurance schemes in relation to this USM regime. We will continue to work with the ASRs, SFC, Hong Kong X, and we will continue to communicate on how we improve data security. Thank you. Ms. Carmen Khan. Thank you, Chairman. Chairman, about the uncertificated securities market and the implementation arrangements, in order to make it effective, it is important that you explain it to the public. In fact, as explained, uncertificated securities will offer better safeguards for shareholders than certificated securities, because some elderly investors are still thinking that share certificates will offer them better protection. Now, you mentioned the USM rules covering 5 areas, including the keeping of registers, as well as authentication, etc. And in fact, if the certificates are deposited with a CCAS, they will only carry the legal title but not the actual beneficial interest. So I think you need to tell us how this is an improvement, and you should explain to us the relevant process and the details of the regime. Somebody asked the transition period, and I think if you could give us more explanation, then it will be shorter than 5 years. It is important to allay concerns. Don't just leave it here and let shareholders or firms to decide whether to adopt USM or not, because your objective should be to expand the adoption of USM. You should shorten the transitional period. The other question is this. There are a dozen or fewer than 20 securities registrars in Hong Kong. They have yet to be approved. So can you tell us how many do you expect to become approved securities registrars? Will there be market consultation? Are you going to announce the outcome of consultation? How many in the end will be approved as ASRs? Third point on security issues, I just want to remind all parties to be vigilant. There should be better system management in light of the recent blunders. We want to make sure that this overhaul will be resilient against cyber attacks. Yes, a response from the administration. Thank you, Chairman. Thank you, Ms. Khan, for your suggestions. We'll definitely consider them. The vision, of course, is to fully implement the USM for the stock market. Well, at the moment, you only hold legal title if you have the share certificate. In the future, under the USM regime, you will have legal title if you hold uncertificated securities in an electronic manner. This can help enhance efficiency and provide better safeguards. We will continue to publicize and educate the public about the USM regime. This is a better choice for them. And also, even after rollout of the USM regime, they can still hold the share certificates in paper form. About transitioning to ASRs from just registrars, I will give the floor to Mr. Ricola. We need the Legislative Council to consider the subsidiary legislation. Only when the resolution is passed will it be effective. Now, before that, we haven't received application, or we can't receive application from the registrars at the moment, but we have begun communication with them. As we understand, the majority of them have appointed some companies to develop the relevant systems for them. This is an interactive process. After the law comes into effect, we will formally deal with their applications. Now, if there are problems with their applications, we'll remind them and see if improvements can be made. As far as the current progress is concerned, the majority of the registrars would like to continue to provide services under the USM regime. Chairman, of course, I understand they have yet to receive applications since they haven't even proposed a resolution in the Council. But under the 5 broad areas here, have you assessed the situation and see whether the dozen share registrars could become approved registrars or ASRs? And also, you expect the number of days to be cut from 10 to 2 business days for transfer of securities. This is one benefit to incentivize investors to join USM. Anything else to add? Or Ms. Khan, would you just like to make a comment and a response from the administration? We're going to set out the requirements. It depends on the scale of operation of the securities registrars. If it is of scale, definitely they will need to comply with more requirements because they would have a bigger impact on the market operation. Well, I find the current legislative framework reasonable as long as they could comply with the requirements in the framework. I don't see any obstacles in their providing services in the future. Last member to speak, Mr. Lee Chen-keung. Uncertificated securities is the major trend already adopted by many countries. We should follow suit, but there are concerns such as recent data breach incidents. Now, you should learn a lesson from the data breach incidents involving government departments so as to provide safeguards for investors. Many investors would use banks or brokerage firms as intermediaries when purchasing securities. We're aware of the information when we make the purchase through an app, for example. Will there be a centralized platform for the dissemination of information in the future so that the majority investors would have a clear idea of the shares they hold for the benefit of managing the assets or even estates? Like Dr. Kennedy said, there is an issue with insurance. Now, according to your reply, you will stick to the existing mechanism. But in fact, from the investor's perspective, the amount of insurance should be pegged to the volume of investment. Is that right? So that there is a more higher payout for higher level of investment. I'll give the floor to Mr. Leung. Well, I stand to be corrected, but you seem to be asking about whether there'll be a platform for better dissemination of information for investors, right? That means a centralized platform for investors to look up the number of shares they hold instead of relying on banks or brokerage firms. Well, there should be a central platform for storing all information relating to transactions in the market. So it's a question on exchange of information. At the moment, after an investor buys shares, they would receive a notification from the brokerage firms or banks, and so far I haven't heard of any errors in the process. So perhaps we should first gauge the market situation before I give a response to you on this. Well, I'm suggesting a central platform because, say, there might be beneficiaries to an estate. If somebody becomes deceased all of a sudden, then the beneficiaries may not have an idea how many shares are held by the estate. Of course, I'm talking about legitimate beneficiaries to the estate. Let me supplement. According to our design under the USM regime, every investor will need to apply for adoption with an ASR for an account to be operated to manage the uncertificated securities. Mr. Lee was asking whether there would be a centralized platform or mobile application for a third party to know about the shares held by an investor. Now, this involves a more complex issue, such as information disclosure and whether the investor would give permission to a third party to look into their assets. So at the moment, we don't have a central or centralized platform as Mr. Lee suggested. Still, we've heard what Mr. Lee said when reviewing the design of the USM regime with our counterparts. We will see how we can incorporate the members' concern. Right. Lastly, I think Mr. Lee also mentioned the data breach risk. So please note his comments as well. Lastly, I'd like to say that the USM implementation and the relevant legislative proposals have been something on the horizon of the administration, the Hong Kong ex-SFC, and the stakeholders for a long time. And you have been in close communication with each other. The introduction of the USM regime will help revamp the market. Now, perhaps I will invite the administration to respond to the following. Very briefly, the paper mentions that there will not be additional costs brought onto securities firms. There may be an indirect cost in upgrading computer systems. For example, they may need to test the system on weekends. I hope that you will make the additional cost as low as possible for the securities firms. The other point is, as mentioned by other members, some elderly investors or some minority shareholders may still wish to hold the share certificates in paper form. So it's hard to bring a change in this regard. So you should minimize the impact on them. At the moment, we buy shares in lots. In the future, securities become uncertificated. There is room to lower the fees and charges. So I just want to bring to your attention this point. Any response? Yes, we do consider the impact of the USM regime on securities firms. The majority of costs will be absorbed by the Hong Kong X and the major firms. There shouldn't be a major impact on individual securities firms. Their participation means a lot to us when the USM regime is formally launched. If there is a need to, if there is any assistance needed for the testing of the system, etc., we'll be happy to liaise with them and come up with an agreeable approach. As for elderly investors, we do note that they prefer paper share certificates. Well, under the USM regime, there is no mandatory requirement for them to transition to uncertificated securities. But if they want to enjoy the benefits under the regime, what we need to do is to mount publicity to let them know that they will be better protected under the new regime. Finally, on fees and charges, the SFC and the Hong Kong X are considering certain fees and charges, such as fees on transfer, etc., and that arrangements should be made to make sure that the levels of fees to be charged would be reasonable, and that this will be subject to the SFC's approval as well. The SFC will consider whether the levels of fees are appropriate.
All right, thank you. According to the paper provided by the administration plans to introduce a bill into the council this year to amend the stamp duty ordinance and introduce new and amend existing subsidiary legislation in order to implement the USM regime in 2025. Do members have any comments to make? All right. None? Thank you, representatives, for attending today's meeting. Agenda item number 6, any other business? Any other business? If not, meeting adjourned. Thank you.